Hello and welcome to Profiles in Risk. This is your host, Tony Cañas, and today I have with me Layla Atya, and I'm probably mispronouncing your last name, so I apologize for that, founder and CEO of Quantumerge. So Layla, thank you for joining me today. How's it going?
Thank you. Everything is great. It seems like everybody forgot about COVID already, so can be better.
Hopefully we don't live to regret that.
I know.
I'm still wearing a K95 for things like flying, and even in the elevator in my apartment. I saw how little they wore a mask in the elevator while the pandemic was going, so I don't trust them in general.
Yeah, definitely.
I'm in Atlanta, Georgia, so it's the South. Hopefully, DC is better. You're in DC, right?
Yes, I'm in DC, but trust me, I go to like across the river to Northern Virginia like every day, and I never know like what do I do? What do I do? Because it's like they never, I think, even implemented the mask mandate. I mean, that's overstatement, but still felt like it.
Gotcha. Okay, and we connected back at InsurTech Connect 2021, and we finally got around to recording. It's May 9th. So we always give the guest a chance to give the elevator pitch. So what is Quantumerge?
So Quantumerge is a platform, and a lot of people are asking us, well, are you a broker? Are you a carrier? Since you're trying to operate in the insurance space, this is a platform that essentially connects brokers and carriers. So if you think about it, it's nothing new, but the niche or the void that we are addressing is the specific type of the insurance that we are addressing that is called reps and warranties liability insurance or transactional liability insurance. And that's where all the complexity and all the differentiation comes from. So we are a platform, we are a digital reps and warranties liability insurance placing platform that sort of connects brokers and carriers and then all the deal makers in between to democratize access to reps and warranties insurance.
Okay. So it's definitely a side of insurance that I'm not too familiar with. So give me what is insurance? What is transactional liability insurance?
Great. This is why I created Quantumerge, because people who have been in insurance like forever, they're like, what is this?
I've got to say, I've got my CPCU, I've got 9 other designations, and it's not mentioned now. I don't have my RPLU, so it could be mentioned there, but go ahead.
Yeah. So whenever a buyer is willing to buy a seller, so two companies, whenever they are merging or acquiring or for whatever reason, they are signing purchase agreement or acquisition agreement. And this agreement usually has different clauses. And so one of the sections in the agreement is called representation of and warranties section of the buyer and the seller. And so essentially in that contract, they're saying, what is it that they represent? Pretty much the wording says that I represent that this is my company. I have the authority to do whatever I want. And so it's certain wording that makes the buyer feel a bit more comfortable with the purchase, and the seller being a bit more comfortable with the fact that the buyer is buying their company. And so reps and warranties insurance or transactional liability insurance. Transactional liability is sort of an umbrella for different types of insurances, but specifically reps and warranties is the coverage that drills down into these reps and warranties, into the reps and warranties clause of the purchase agreement, and says, okay, if something goes wrong in the post-merger space, we're willing to indemnify you or cover the losses with regards to the breaches resulting out of the reps and warranties clause of that particular purchase agreement. So that's pretty much what it is.
Okay, so go ahead.
Yeah. So in the past, for example, I'm going to give you a very, very quick intro to this whole thing. In the past, there was no reps and warranties insurance, right? I mean, so there were banks. And so in order to protect themselves, buyers and sellers were putting certain amount of money into the escrow account for up to 12, 18 months. And so if something happened in the post-merger space, the bank would release the money and then the loss would be covered. What do we do with, 36 months from the closing date, or like it's already up to the seller and the buyer? So the buyer can actually turn around and say, seller, depends on what is left from the seller, but it's either the buyer liable for all the uncovered uninsured exposure, or the seller will be liable depending on what is it that that he's selling and how much equity they're keeping after the merger. And so essentially adoption warranties insurance substitutes that escrow account. So instead of putting the money into the bank and being covered only for 18 months and potentially having a gap in not in coverage, but in the financial solvency, right, to cover that, to cover these losses, adoption warranties insurers say, okay, well, you pay us and we pay on your behalf. That's all.
Okay. So is this normally sold by the, I'm guessing, the very large brokers, the March and Aons of the world?
Well, yes, exactly. So usually larger brokerages, they do have M&A departments. There are companies or brokerages specializing only in the M&A. And the reason why it's such a sort of unknown type of coverage is because in order to broker, in order to solicit the insurance, in order to advise, you actually need to understand some legal consequences of everything you're advising. So a lot of people that are in that space, they are lawyers, or they've been practicing, or they are paralegals, or they just have a ton of experience in this space. So yeah.
Okay, so before Quantumerge, was this side of insurance very, very paper-based, or how was it transactional?
It is paper-based, exactly. So it's all about, like, usually all the documents are being dropped in the data room, and then in the data room, like, the underwriters and brokers and everybody sort of putting their hands into the data room, trying to figure out the math behind these folders. Because when mergers and acquisitions happen, sellers are interested in just providing information as fast as possible, and usually it's a mess, it's unorganized. Data rooms is a different type of business. But for the underwriters, they're looking at certain due diligence files, and the underwriting of that coverage consists of pretty much two things. I'm either going to insure you or not, because it's not even about pricing. Pricing is pretty standard across the industry. The policy is very manuscripted because it reflects what is written in the acquisition agreement. But underwriters are looking at the risk mostly from the standpoint of, okay, well, I feel comfortable with this company. I feel comfortable with the due diligence that comes with that company, and then I'm going to offer this coverage, and that brings me to another point, and that's why I use the word democratization, because think about this for a second with me. 7 out of 10 applications on average are being declined by the underwriters, and not because it's not profitable, but it's because underwriters, like, it's much easier to work with returning clients because there's so much negotiation going on. What sort of clauses the client is going to go for and what clauses are not, and what is going to be a bottleneck. So it's much easier to go with familiar faces. And so that's why private equity firms, VC firms, they become the holders of this insurance. And then everybody else who is just willing to protect themselves are being declined, or they just don't have the market to go to.
Okay. So how did you discover this was a problem?
So I'm coming from I'm a former underwriter, and so I understand a little bit about analytics. And I worked for an insurance company, a wonderful, wonderful company, but they had a lot of IT issues. And so I left the company to establish a technology company. That's where Zala Technology sort of steps in. So Zala Technology was established by insurance nerds to service insurance companies. And so for the past 2 years, I've been servicing different insurtechs, and they were acquired. Some of them, succeeded, failed, whatever it is. But what I've realized that they had no idea what reps and warranties is. They were not even a part of it. They are brokers, P&C brokers, smart guys and girls. They didn't know what was that. So all of this reps and warranties, like all these policies were placed, it's a buy-side policies where they protect the buyers more than the sellers. Yes, they give certain sort of comfort to the sellers, but it's a buy-side policies. But because these insurtechs, or these essentially my clients, they were the first and the only time sort of sellers in the M&A space, they just never even saw or had any idea about reps and warranties, and so they actually sold their companies being unprotected, or just underinsured, and we don't know what is going to happen with them a few years from now, like if a claim does arise. I mean, they're totally uninsured, right? So when I saw what was going on, and then I spoke to a couple of brokers, P&C brokers that work for large brokerage companies, they also didn't know what reps and warranties was. And then I went and I attended a few conferences with these very, very smart people with a lot of money. And all of them were saying, oh, we need, an innovation, and nobody knows about this coverage and whatnot. But then innovation didn't come at all. So for the past 2 years, this idea was brewing in my head. And then 7 months ago, I said, that's it. I'm just ready to sort of make a difference. And that's what I'm doing here.
Okay. So what does how does transactional liability insurance look like when using the platform?
Yes. So it's obviously like a multi-phase approach. We have a roadmap, and we will be releasing various different features. But essentially, what my goal right now is that we are not really changing a lot at this very moment. We are helping brokers, reps and warranties brokers, to expedite their flow. Because just think with me for a second. In order to place in reps and warranties coverage, sometimes it takes up to 3 months. So it's not that fast. Exactly. Of course, a lot of it is not just automation, it's also negotiations. So what I'm doing, I'm expediting that process. So everything that was manual, I'm taking care of. And then I'm letting brokers focus on the negotiation part of it. The interesting part about the platform that I'm working on is that I hate the word AI, so I'll call it machine learning. And even now, it's not a true machine learning, because we are going through data we're trying to understand. And before it becomes machine learning, there will be still a lot of manual work that has to be done, or statistical analysis. But we are trying to understand the contracts, and we are trying to understand the behavior, the claims behavior, to say, okay, guys, so here's the broker, here's the underwriter, and you are a part of the some technology company in biohealth, let's say, is being acquired. We know that claims are coming out of these items in this industry for a company of that revenue. We can actually navigate and suggest what policy clauses should be included on that policy for that specific client. So we're essentially aiding from the legal standpoint. And then it's up to the underwriter and the clients to sort of take it or leave it. But we're guiding. So that would allow a lot of inexperienced brokers or underwriters to actually understand the industry much faster. But also think about P&C brokers. Like I love P&C brokers, and a lot of their clients are being acquired. What part do they play there? They all want to get this piece of the pie, but they just don't know how and where. So, for example, right now, I've released a very small and simple tool on our platform, on our website. It's called Estimator. So any P&C broker can just go and, let's say they know the name of their client, they can type the name. They don't even have to type the name, right? Just based on the size of the deal and some basic information, I can tell you now how much this reps and warranties policy, transaction liability coverage, would cost. And that gives a very good idea, realistic idea to the broker as a risk manager to a client, right? Of what to expect, because it's all about knowing what to expect in this transaction, right? If I'm a broker, I want to be a good risk manager to my client. And so as a PNC broker, I want to make sure that they have access to this insurance. And if they do not have the licensure or the knowledge how to place it, they are connected with reps and warranties brokers through our platform in order to ensure that there is this, we're truly streamlining placement, because we are not excluding anybody from the chain. Everybody is important in placement of this insurance, because without PNC, like other lines, reps and warranties would be good for nothing.
Okay, so truly, when you say democratize, you truly are trying to solve you're trying to help our economy get to the point where most transactions are covered by most M&A transactions are covered by this type of insurance, where right now it's a very small percentage.
Exactly. But not only that, I mean, we are trying to understand the behavior of a risk. We've developed a score, for example, that predicts the probability of a claim in the reps and warranty space. Right now, we're not going to be releasing it because we're still testing. As you might know, any science experiment or any scientific innovation requires some experimentation. So that's what we are doing on the back end. But right now, we're actually going to be launching officially our platform in June, where brokers will be able to onboard and start utilizing it. And then we also have an underwriting platform. So underwriters will also have their side of things. So essentially, the platform will truly become that risk manager for both brokers and underwriters, helping underwriters to underwrite better and helping brokers to be a better risk manager to their clients.
I'm wondering, was there available data for those LexisNexis or Verisk or one of the other data providers provide data on this type of insurance, or did you have to go?
They do have a lot.
Oh, okay.
They do have a lot. Having that said, still all of the data, what we are looking at, they're in the hands of bar associations. They're in the hands of large brokerages like Aon. Lockton also has a big M&A practice. So they are there. They are in the hands of private equity firms as well. Because what we are specifically, we are not interested in telling you, the majority of claims arise out of the breach of financial representations or breach of material contracts, right? That right now, everybody knows that. I mean, it's not interesting. What we are looking at, we want to understand how qualitative information wording in the contract is affected or will affect the claim in the future, and how insurance carriers can underwrite better. Because right now, as I mentioned, it's just a matter of yes or no. It's okay, well, we know we're comfortable with this client or not. What I'm saying is that we are providing information to understand how to create that policy to keep reps and warranties profitable, and how for the brokers, how they can present their client in a way that it's a better risk for an insurer, right? So can they mitigate the risk before before a problem happens or before they even apply for that insurance policy?
Is there any risk mitigation for now, or is the whole concept of mitigating risk for this type of policy is a whole new field?
Yeah, it's a whole new field. Absolutely. I mean, there are lawyers. Everybody works with lawyers. I mean, obviously, there is actually representations in the representation and warranty section. There is actually, or on the policy, there is a specific wording saying that we urge pretty much all the legal representatives to do everything possible to mitigate the risk. But oh well, I mean, how do you know, right? So it's still extremely, like, if you think about cyber like 10 years ago. It was a wild, wild west. And so that's where reps and warranties is right now. And everybody thinks that everything is okay with it, especially if you go to carrier, because it's so profitable that like carriers don't even care anymore. You know, like it's the matter of just collecting premium and releasing terms, especially since the market is hardening a little bit in the US.
Okay. What's the revenue model for Quantumerge? Is do the brokers pay for it? Do the carriers pay for it? Is it a mix? Is it a per transaction fee? How is that structured?
It's a mix. It's a big mix. You know, when I actually took an idea from InsurTechs that I work with, a lot of times when companies are hiring new employees, they're offering, you know, here's a salary, here's equity, and depending on the salary that you're going to choose, you're going to have different percent of equity, right? And so that I took that idea and I implemented it in Quantumerge as well. So if we're working with brokerages, I understand that some of the brokerages might not afford that license fee, right? So we're going to take a little bit from their commission, just a tiny little bit, so it's not, you know, painful enough, but it gives us enough revenue to sort of keep up, you know, to keep up with operational costs. And then for the carriers, obviously the same, but it's a little bit different type of animal altogether. So the conversation there will be, and it depends, you know, on the carrier, of course, as well. So very vague answer, but yes.
Okay.
That's what we have for now.
Okay. So when this goes live, I will tag you on LinkedIn, and I'll tag Quantumerge, and I'll include the website in the show notes. Thank you for joining me today. I had no idea that this side of insurance existed. So it is very, very interesting to learn about, and I look forward to see you continue to grow this.
Thank you for having me here and letting me talk about it.
Awesome. I figured that helping spread the word about an obscure side of insurance can only be a good for our industry.
Absolutely, especially with the amount of acquisitions happening in the insurance and InsurTech space. So definitely.
Absolutely.
Yeah.
Thank you.
Yeah. All right, Tony. Thank you.